And we are live. Good evening, everyone. Tonight we will be discussing the FDIC, which stands for the Federal Deposit Insurance Corporation. Can the FDIC go broke? Does the FDIC have enough deposits on hand to insure all of the bank accounts up to $250,000 if we begin to start to see a lot of banks go under? And have we seen similar insurance funds backed by the government go under in the past? And yes, we have. And we're going to dive into the savings and loan crisis when we seen the FSLIC actually go belly up, which also birthed into and morphed into new insurance funds. So as you come in, please like the video, share the video. If you're not subscribed, subscribe and hit the notification bell. Also, join my mailing list so that you can be notified via email in case YouTube isn't sending you my notifications when I'm going live or when I'm uploading a video. Also, if you want to contact me, my Instagram will be in the description below. Simply follow me on Instagram and shoot me a DM. And if you want to support the content financially, a link to both my PayPal and Cash App will be in the description below, because YouTube is a crapshoot. Sometimes they monetize your videos, sometimes they don't. And if you can hear me nice and clearly, just type 1. I see some of you guys typing 1, so that's pretty good to see. So with that being said, guys, let's get into it. Something sparked the FDIC to put out a statement recently with a video, and I'm going to play that video for you right now so you can understand where we're going with this video. So let's upload this. Let's make it big. Let's enlarge it, and here we go.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
So, obviously, we know with fractional reserve banking that the banks, they don't have enough reserves on hand. If everyone at one time went to the banks and went to the ATMs to withdraw their money, we know for a fact that they don't have enough money on hand. That's just a fact. And when you go into the history of insurance funds, when she says that no one's lost a dime, see, this is known as doublespeak. This is Orwellian, because you have lost money. You've lost money through inflation. You've lost money through purchasing power. And it's very important that you understand what I'm saying right now, because there have been banks that have went under, and there's been previous insurance funds, as I stated before, the FSLIC, that had to be bailed out by the federal government through either taxes or inflation. And we know they bail them out through inflation, which is a hidden tax on you. So yes, it may not directly cost you money, but it will cost you money in the long run. Now, let's take a step back. Let's build up so we can understand where we're going. With fractional reserve banking, for those of you who do not know what that is, what fractional reserve banking allows the banking institutions to do is that if you deposit $100 in the bank, legally, the bank is allowed to take $90, which is 90% of your deposit, and loan that money out. Well, the Federal Reserve just slashed the reserve requirement from 10% down to 0%. So we know that these banks are loaning out 100% of their deposits, because most of the money, as I've said time and time again, it stays inside of the banking system, because most of the things we do and most of the things that we pay for and how we transact is digitally. So they're not worried about people really coming down there to take their money out. So let's just read this real quick, just so we can get up to date. It says, in light of the shift to an ample reserve regime, the board has reduced reserve requirement ratios to 0% effective March 26. So now, what does that simply mean for those of you who may be new? Let's flip over to the iPad so you can begin to understand what I'm saying so that we can build where we're trying to go. Very simple. This is based off of an 80-20 reserve requirement. So simple. If you put $100 in the bank will hold $20 in reserve, and they will loan out $80 of your money. So we know, just based off of this one example right here, if they're only holding $20 on hand and they're lending out $80 of your money, if you came back to go get your money right then and there, they wouldn't have it. So this is why now, which makes the government and makes the insurance funds, and then i.e. the Fed, the lender of last resorts, because if these banks start going under, they're not going to have your fund, which is why they created the insurance fund, which is known as the FDIC. So again, if you want to know about fractional reserve banking, go and watch my previous video. And as usual, whenever you see people in the media start putting out statements like this, don't take out a bunch of cash out the bank because of the virus. You know, they fear the fact that there may be a bank run. Because again, the banks, they don't have the reserves on hand. It says, yes, these are scary times, but that doesn't mean you should head to the bank, drain your accounts, and put your cash under a mattress. Bank deposits are insured by the Federal Deposit Insurance Corp, and the FDIC has some helpful guidelines on its websites to answer questions consumers may have. So, let's see. How much money does the actual fund have? Right? That would be a question that you would want to ask. Well, if it's an insurance fund, how much funds is inside of the insurance fund? Well, right here, and I believe in giving you, again, relevant factual information. This is the FDIC.gov's website. Let's zoom in. It says the the Deposit Insurance Fund, DIF, balance increased by $2.2 billion to a total of $92.7 billion. So I want you to think about that for a second. The insurance fund has less than $100 billion in it, but they are insuring up to $9.5 trillion of assets. Think about this for a second. So if you start to see multiple banks begin to fail, they don't even have nowhere near enough funding reserves in the fund to back up the assets that they're supposed to be insuring. There's $9.5 trillion that they're supposed to be insuring, and they only have $92.7 billion in the insurance fund. I really want you to think about that for a second. Now, let me read to you exactly what the FDIC is and what they do, because some of you may not know. And this is from Investopedia. As you see, Federal Deposit Insurance Corporation. What is the Federal Deposit Insurance Corporation, FDIC? The Federal Deposit Insurance Corporation is an independent federal agency insuring deposits in U.S. banks and thrifts in the event of bank failure. The FDIC was created in 1933 to maintain public confidence and encourage stability in the financial system through the promotion of sound banking practices. As of 2018, the FDIC insures deposits up to $250,000 per depositor, as long as the institution is a member firm. It is critical for consumers to confirm if their institution is FDIC insured. Now, understand, to even have this type of insurance in place creates moral hazard, because now, number one, consumers, they're not doing their due diligence on what's happening with their money and what banks are doing with the money. And then number two, banks are allowed to go and take and put out risky loans and make risky loans because they know that they're going to get bailed out in the event that something happens. And notice that I keep saying this over and over again. This is the problem with the banking system across the board because it incentivizes bad behavior because of moral hazard. Because if you know that you can get away because there's insurance there, it rewards you for taking excessive risk. And this is the problem with the whole bailout culture. Now, Neil Kashkari said something, which I've been saying time and time again, and let's play with his words for you, that you don't have to worry about them not having the money. They're just going to print the money out of thin air, but you're going to pay for it through inflation. And I'm going to show you that in a second. So let's play this.
You don't need to. Your ATM is safe. Your banks are safe. There's enough cash. You don't need to. Your ATM is safe. Your banks are safe. There's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system. You don't need to. Your ATM is safe. Your banks are safe. There's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
So you don't have to worry about the banks not having the money as far as like eventually you'll get your money, as I've said before. The problem is, where's the money going to come from? And the money's going to come from the printing press because, as I just showed you, they don't have enough reserves in the fund to cover the $9.5 trillion. So they're literally going to print this money out of thin air. So yes, you may get your money, but you're going to get it through inflation. And then what's going to happen is before they can give you the money, they're going to have a bank holiday where they actually close the bank for a few days to get everyone their money. And this is why the FDIC was created in the first place. And I'm going to read that to you right now. Where do I have this at? Give me 1 second. So, and again, I believe in giving you relevant factual information. You can go look this up. This is on the NewYorkFed.org website. This is the Federal Reserve Bank of New York. And they're talking about the first bank holiday not the first, but what basically ushered in the FDIC. It says, why did FDR's bank holiday succeed? After a month-long run on American banks. So basically, this is during the Great Depression, where people didn't feel that their money was safe and secured and they wanted to have their money. People were running to the bank to take their money out. So after a month-long run on the American banks, Franklin Delano Roosevelt proclaimed a bank holiday beginning March 6, 1933, that shut down the banking system. So he shut the entire banking system down. When the banks reopened on March 13th, depositors stood in line to return their hoarded cash because people begin to start hoarding cash. As I've said earlier, and I'll say it again, we know for a fact that they don't have enough deposits on hand because of fractional reserve banking. If you ever went to an ATM before and you try to put your card in there and take money out, sometimes the ATM machines don't have money. So they are trying to basically, when they put this statement out, when she says this, they are basically trying to tell you don't run and do that because they know that they don't have the reserves on hand. But again, that does, as I said before, you will get your money. The question is, where is it going to come from and what is it going to be worth after they have the bank holiday? And we've seen this happening in China where there were runs on the bank right here. Give me 1 second. Let me turn this off because this is loud. So this was the run on the bank that happened in China when people got scared. Everyone showed up to the bank to go and take their money out, and the bank had to close because, as I stated to you before, the banks don't have the money on hand. So you can see these people standing in large lines doing a run on the bank trying to get their money, and the bank had to close down. And they had to wait 2 to 3 days to get their money. Now, you have to ask yourself, if we're in the middle of this outbreak, do you want to have to even be out here standing on these large lines around all of these people who can potentially get you sick? Now, where's the money going to come from? after eventually, because remember, the fund only has $92.7 billion in the FDIC fund, and they're insuring $9.5 trillion of assets. So we know if you start seeing a whole bunch of banks go under, the federal government is going to have to step in, which basically the FDIC is being backed and backstopped by the full faith and credit of the United States government, which is the taxpayer and the printing press. So now listen to what Bernanke had to say before. I played this before because this is how they're going to basically create the money, right? They're just going to push a few buttons and send the money to a bank.
Is that tax money that the Fed is spending? It's not tax money. The banks have accounts with the balance sheet. Is that tax money that the Fed is spending? It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding about printing money. The Fed issues U.S. currency. That's why it says Federal Reserve Note on all the bills in your wallet. This is the Bureau of Engraving and Printing, just a few blocks from Burnett.
So as he said, so again, let's say you have your money sitting at a bank. The FDIC is insuring that deposit up to $250,000. So in the event that, let's say, the insurance fund runs out of money because they only have $92.7 billion, Bernanke's telling you they can just basically debit and credit your account like it's nothing. But again, that money is coming through inflation. It's coming out of thin air. It is going to cost you in the long run. So now, has an insurance fund went belly up before? Because one thing about history, as I've said time and time again, history doesn't repeat itself, but it damn sure rhymes. And I encourage you to go and read the book, The Creature from Jekyll Island. I'm going to read a few chapters from I'm going to read a few passages from the book, because once you begin to understand this whole idea of bailouts, insurance funds, bank runs, these things have happened over time throughout history. The problem is we live in this hyper society where everyone's consuming information at such a rapid rate that you never really get a chance to sit and really think about connecting the dots and seeing that we had the savings and loan crisis that happened in the 1980s and 1990s. Now, some of you that may be a little bit older, I mean, this was before I was even born, you are aware of the savings and loan crisis. And there was an insurance fund by the name of the Federal Savings and Loan Insurance Corporation, which basically ran out of money. And that's what I want to do right now. I want to flip this over and I want to read a little bit about the creature from Jekyll Island so we can begin to understand where we're going. And then we're going to come back to the savings and loan crisis, because remember, it's problem, reaction, solution. Every 8 to 10 years or 7 to 10 years, we average a recession. It's known as the boom and bust cycle, but it's really just a matter of its credit cycles. When the economy's booming, that's just people going into debt. And then something happens, whether it's a war, whether it's a dictator that's getting taken out, whether it's 9/11, whether it's a pandemic, whatever the case may be, something happens that pops the bubble, right? The Fed blows the bubble, and then something happens throughout the world that pops the bubble. But the problem with the bubble, this boom and bust cycle, is it doesn't benefit Main Street, and what we get stuck with the bust. So we don't get any of the benefits in the bubble. And then we have to deal with it through the taxes because we have to bail out these corporations and banks. And then, even if the government doesn't have the money, they will print it into existence, which will cause us to have inflation. So let's flip over to the iPad. And I encourage you guys to please go and get the book, The Creature from Jekyll Island. Now, these insurance funds, if they run out of money, they're going to be backstopped by the full faith and credit. So let's read this. It says, the protectors in Washington responded in 1982 with a joint resolution of Congress declaring that the full faith and credit, obviously taxpayers, of the United States government stood behind the FSLIC. Now remember, this was a similar insurance fund to the FDIC. That was a reassuring phrase, but many people had the gnawing feeling that somehow we were going to pay for it ourselves, and they were right. Consumer Reports explained, this is what I have highlighted. It says, behind the troubled banks and the increasingly troubled insurance agencies stands the full faith and credit of the government, in effect, a promise sure to be honored by Congress that all citizens will chip in through taxes or through inflation to make depositors whole. Through taxes or inflation. Guys, I keep telling you, go and get this book because you will understand what's happening. This has been going on for close to 100 years. There's nothing new. The only difference is the bailouts are getting bigger. That's it. Which is why I have so much faith in Bitcoin, and which is why I have so much faith in gold and silver. It says the plight of the S&Ls, which is just a short acronym for savings and loan, was dramatically brought to light in Ohio in 1985 when the home state Bank of Cincinnati collapsed as a result of a potential $150 million loss in a Florida securities firm. This triggered a run, not only on the 33 branches of home state, but on many of the other S&Ls as well. So they were having bank runs back in 1985. Because a bank collapsed. See, this has happened before. This is not new. So don't think that I'm making this up or I'm just trying to sell you some conspiracy theory. No, we've had bank runs happen in this country before. We've had banks collapse, as we've seen in 2008. Now we had a bank collapse in 85. The news impacted international markets where overseas speculators dumped paper dollars for other currencies and some rushed to buy gold. I really want you to understand what I just said here. This happened in 85 where people started dumping the dollar for other currencies and they ran out and started buying gold. Gold has been money for thousands of years. It's a reason why when things happen and people panic, they run to gold and they dump the dollar. It's only a matter of time before the same thing happens now. We just had a 3 million print for unemployment. And we're only at the beginning. So when people come and say, oh, well, gold sold off or, oh, Bitcoin went down. Guys, we're only in the beginning. We're only in the beginning of the depression. It hasn't even started yet. We haven't even hit the bankruptcies that are going to start to happen yet. We haven't even seen a huge spike in unemployment that's going to hit us in the next 3 to 6 months. We're just beginning. There's only two things that the government can do now. They can either let everything fail or bail everything out. So the only way the economy can recover is they have to print trillions of dollars to bail everyone out. But let's get back to the book. It says, within a few days, depositors demanding money caused $60 million to flow out of the state's $130 million insurance fund, which, true to form for all government protection schemes, was terribly inadequate. If the run had been allowed to continue, the fund likely would have been obliterated the next day. It was time for a political fix. So the fund was almost wiped out in a matter of days. Why? Because they didn't have adequate reserves on hand. Now let's go back to the FDIC. The FDIC only has $92.7 billion in the fund, and they are insuring up to $9.5 trillion of reserves. We know for a fact that's grossly inadequate. So again, let's get back to the book. On March 15th, Ohio Governor Richard Celeste declared one of the few bank holidays since the Great Depression and closed all 71 of the state-insured thrifts. So they was having a bank run. This is in 85. The fund doesn't have enough money in it, so they have to declare a bank holiday. Now I want to get to another part. Here we go. It says the fallout begins. So I'm right here right now, guys, so you can see where I'm at. I'm over here where I'm highlighting next. I know some of you may be wondering, what am I reading? It says in March of 1986, the FSLIC had only 3 cents for every dollar of deposits. By the end of that year, the figure had dropped to 2/10 of a penny for each dollar insured. Obviously, they had to keep those thrifts in business, which meant they had to invent even more accounting gimmicks to conceal the reality. I want to repeat that for you again. It says in March of 1986, the FSLIC, which stands for the Federal Savings and Loan Insurance Corporation, had only 3 cents, that means 3 pennies, for every dollar of deposits that they were supposed to be insuring. By the end of that year, the figure had dropped to 2/10 of a penny. We're talking about fractions of a penny for each dollar insured. Obviously, they had to keep the thrifts in business, which meant they had to invent even more accounting gimmicks to conceal the reality that the banks were bankrupt, because the banks don't have money. They print money out of thin air. And your deposits are a liability, because if everyone shows up at one time to get their money, we know the banks don't have the money on hand because of fractional reserve lending. Give me 1 second. Here we go. Just want to go back. It says the Fed usurps the role of Congress. In February, an agreement was reached between Alan Greenspan, chairman of the Federal Reserve Board, and M. Danny Wall, chairman of the Federal Home Loan Bank Board, to have $70 million of bailout funding for Lincoln savings come directly from the Federal Reserve. What did I say before? The Fed is going to be the lender of last resort. So yes, you're going to get your money, but it's going to come through inflation, because these insurance funds, they don't have enough money if these banks start going under. So you're going to get your money. Don't worry. The government will make sure you get it. It's going to come from the Fed. And we know the Fed has to print money out of thin air. Now let's go down to the next part I have highlighted. It says if Congress does not have the money or cannot borrow it from the public, then the Fed can create it out of nothing, of course, and give it to the government. But in this instance, the Fed was usurping the role of Congress and making political decisions entirely on its own. There is no basis in the Federal Reserve Act for this action to happen, yet Congress remained silent, apparently out of collective guilt for its paralysis. Think about that. What did the Fed just come out and do? They came out and just said they're going to unlimited QE. That they're going. Not only will they buy treasuries and mortgage-backed securities, but now they're going to start buying corporate debt, and now they're going to start buying ETFs. So they're saying, forget Congress. They're operating outside of the government because they're not a government institution. But they've done this before, and people act like this is something new. It says, finally, in August of that year, Congress was visited by the ghost of FDR and sprang into action. It passed the Financial Institutions Reform and Recovery Act and allocated a minimum of $66 billion for the following 10 years, $300 billion over 30 years. Of this amount, $225 billion was to come from taxes or inflation. And I'll highlight that for you right here. Was to come from taxes or inflation, and $75 billion was to come from the healthy S&Ls. It was the biggest bailout ever, bigger than the combined costs for Lockheed, Chrysler, Penn Central, and New York City. In the process, the FSLIC was eliminated because it was hopelessly insolvent and replaced by the Savings Association Insurance Fund. Also created was the Banking Insurance Fund for the protection of commercial banks, And both are now administered by the FDIC. So we've seen this happen before. We've seen a government program, a government insurance fund, go belly up, which was the FSLIC. And we've seen, as this book so eloquently and accurately describes, who had to step in again? The Fed. And it all ties back to the Fed. And once you begin to understand this, you begin to understand why this is problematic. So a lot of people love to pretend like, oh my God, they don't understand why this is happening. Guys, this was back in the 80s when we had the savings and loan crisis. And for people who are older, who've been around for a while, we've seen it. So yes, you'll get your money, but you're going to get it through inflation. They are going to print that money out of thin air, the same way they did for the FSLIC. So when you hear me talking about why I buy Bitcoin and why I buy gold and silver, because I understand you have to have a hedge against this system, because this system is morally corrupt. We've seen it. All it does is push inflation, and all the Fed does is blow bubbles. And then when the bubble pops, you, Main Street, the taxpayer, you have to bail out the institution. Then you lose your job, and then you pay again through inflation. I mean, look at the stimulus package that they just passed. You're getting $1,200 while Wall Street is going to get trillions. And these institutions are going to get billions out of those trillions. And they gave you $1,200. And there's 171 of you watching this, guys. Hit the like button. It helps the content rank in the search engines, and it helps the content get out there. Think about that for a second. This is nothing new. We've seen the bank run happen. We've seen the insurance fund be insolvent. So we don't have to guess anymore as to what's going to happen, because again, when you're investing and you're putting together a macro theme, the first thing you have to say to yourself is, what's happened in the past that has led us to the present? And has anything changed in the present where I need to shift my investment focus for the future? Have you seen anything change in the past 2 months? Nothing's changed. What are we doing? Bailing out banks? Bailing out companies? Printing money out of thin air? Quantitative easing? Nothing's new. Alexander Wilson, thank you for the donation. Everything you are talking about happens in It's a Wonderful Life, which came out in 1946. Go back and watch it. A lot of the plot is about banking. I'll definitely take a look at that, and I appreciate you and thank you for the donation. Right. So when you take a time out, right, a lot of you are getting, scared, and you're wondering, oh my God, what's happening? You don't need to get scared, because this has happened before. You need to get prepared and just understand that this is going to keep happening, which is why Bitcoin was birthed and created after the financial collapse, because people want something different. This boom and bust cycle keeps happening, and it will continue to keep happening because people, many of us are asleep at the wheel, and we're not paying attention, and we don't value this type of information, and we don't value, getting prepared. The time to get prepared is when everything is going well, so that now when the bust happens, you can now get into the market and start investing, right? This is why you want to have a diversified portfolio. Because as the book said, when the banking collapse started happening, foreign countries started dumping the dollar and buying gold. And I'm telling you, Peter Schiff talks about this all the time. There is so much debt denominated in dollars. So we have artificial demand for the dollar because of the debt, right? Because it's the reserve currency. But you have to start thinking about other nations. China's coming. Russia's coming. India's coming. They're coming. And remember, we have an aging, booming population, right? We're on the decline. We're sort of like Japan. And now you have to think about countries like, India and China, who, they have young, thriving populations, And they want to be first world countries and first world powers. And you're beginning to start to see that. So I'll read briefly what the savings and loans crisis was for those of you who don't know, because, many of us were young. Like I said before, I wasn't even born. It says right here in 1979, the Federal Reserve System of the United States raised the discount rate that it charged its member banks from 9.5% to 12% in an effort to reduce inflation. The building of savings and loan associations had issued long-term loans at fixed interest rates that were lower than the interest rate at which it could borrow. In addition, the S&L had liability of the deposits, which paid higher interest rates than the rate at which they could borrow. When interest rates at which they could borrow increased, the S&Ls could not attract adequate capital from deposits to savings accounts of members. For instance, they became insolvent. Rather than admit to insolvency, lax regulatory oversight allowed some S&Ls to invest in highly speculative investment strategies. This had the effect of extending the period where S&Ls were likely technically insolvent. I want you to think about that. I really want you to think about that. The banks were insolvent, but they used accounting tricks. And again, it says the Federal Reserve were behind it. And we seen this was in 79. And then we seen a dot-com bubble. And then we seen a housing bubble. And now we're living in the everything bubble. So what do you think is going to happen? The bubble's going to burst. You just have to make sure that you're paying attention and you don't get caught up in this. And you are positioning yourself so that when this happens, you can profit off of it. Or if you believe that it's a scheme and you don't want to participate in it, I can understand that as well too. I totally get that as well. But I encourage you to go and read the Creature from Jekyll Island. Because you don't have to be a math PhD. You don't have to be an economist to say to yourself, they just slashed the reserve requirement down to 0%. So that means that the Fed, they don't have to hold any of your reserves in the banking system. They can loan out 100% of your deposit. And that goes back into the digital economy. Like I was saying to you before, it's really just a matter of debiting and crediting other banking institutions, because most of the money, it's not physical money. It's digital. It's really just about a bunch of ones and zeros on a server. And they're basically just saying, okay, well, I'm going to send $150 from bank A to bank B. And all of that money stays in the financial economy. That's it. It doesn't make it out. So yes, the FDIC, they can go bankrupt, but like Neil Kashkari said, they're going to backstop it. But when you see the FDIC put this statement out, they're putting this statement out because they know they don't want to be embarrassed like that. They don't want to see everyone at one time come run down to that bank and take their money out, because they know if you did it, there wouldn't be any money there. And I'll play the video again because I know some of you are coming in later on. So let's play this again.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
She said it didn't work out well.
We're living in unprecedented time.
I mean, these people are so bold how they put it in your face because they know most people don't care, right? Now, Will Green said this infomercial is fishy. It's not fishy. They're basically, they know that if everyone goes to take their money out at one time, the money's not there. They know it. They know it because of fractional reserve lending. But again, I want to show you this, right? I put this up earlier on my community tab. And I want, because many of you don't understand inflation, right? Many of you just, you don't get it. So this is a picture from a McDonald's menu, from the 70s. You can get, I think this is a quarter pounder with cheese for 70 cents. A filet of fish for 0.48 cents, for 48 cents. A cheeseburger for 33 cents. A hamburger for 28 cents. And milk for 20 cents. Think about this. What's changed? You're still getting paid in dollars. What's changed from the 70s up until now? The value of your money, the purchasing power of your money. You can get a hot apple pie for 26 cents. And I want to show you that. And then you also have to think about the quality of the food back then, and the portion sizes were much bigger. That's inflation. And inflation is a hidden tax that you don't feel immediately. It's something that happens and builds over time. So yes, you're going to get paid your money. Your money, if the FDIC goes broke, like the Fed said, they have your money. But your money is going to lead to these prices doubling and tripling. Brandon Hicks is funny. And you know, it's frustrating to talk to people when people say like, oh, why are you buying gold? It doesn't do anything. It does exactly what it's supposed to do. It does exactly what it's supposed to do. It holds its value. It preserves purchasing power. That's what it's supposed to do. That's it. Nothing more, nothing less. It's doing exactly what it's supposed to do. Alexander Wilson, thank you for the donation. In it, It's a Wonderful Life, there's a run on the bank scene in which the main character begs everyone not to withdraw all of their money because the bank will become insolvent. This explains that movie. Yes, because they know that, right? So when people say, why are you buying gold? Because if I put my money in gold, gold maintains its purchasing power. So when you go to McDonald's, when you go to put gas in your car, right? When you go buy a gallon of milk, the price keeps going up over and over and over again. That's because the purchasing power of your dollar is going down. So you have to think about it. Will Green says, what are your thoughts on platinum? The problem with platinum is the stock to flow ratio, right? What makes gold money is that it's hard to produce more of it. Even if you go into the ground and you dig it up, gold has a stock to flow where basically if you look at the current stock above ground and the flow is the production, to get to the current amount of gold above ground, it would take over 62 years of current production to equal the total amount of gold that's above ground. And that's if you can find it. With platinum, the stock to flow, you can get the total amount of, it's easy to find more platinum, right? So that's why platinum can't be used as gold. Palladium and platinum can't be used as money because it's easy to find it. You can have the entire stock of palladium and platinum within a matter of 3 years. You just increase production and you can go find more platinum. So that's why it can't be used as money. It's easy to find it. So that's why they don't use it as money. Based upon the stock to flow. Let's see, what's the name said? Manic Tiger. Excuse me. It says, I had a moron friend that couldn't understand any of this at all. He thought when I said Fed that I was talking about the government. How do people work so hard the entire day and not know what they're working for? Because most people don't care. And that's just the reality of things. When you're dealing with people, many of them don't care. And they'll tell you they don't care. You'll come across people and say, I don't care about the stuff you're talking about, man. Where's the party at? And you just have to respect that. You have to respect that most people don't care when it comes to money. So I'm going to take some questions now. That wraps up. I mean, it's pretty simple to wrap it up. As I said before, guys, right here from the Fed. I'm going to answer some questions in a second. I'm going to come to the chat. But this is the Deposit Insurance Fund. This is from the FDIC site. Let's zoom out so you can see that I'm giving you straight information. Give me 1 second. I need to fix this window over here. All right. So the insurance fund only has $92.7 billion in it. That's it. And they're insuring up to $9.5 trillion if you look at all money markets, CDs, and banking institutions. They're insuring $9.5 trillion. So you can see they don't have anywhere near the amount of money they need in the event that a lot of banks go under. But again, when you have the Fed and you have the full faith and credit, the taxpayers backing you up, you don't have anything to worry about. And that's just the reality. So now let's get to some questions. Let's see. Like Rich Dad said, why work for money when they're imprinting it? We got to get out of this system. And that goes back to why Bitcoin was created, because many of us, we want to be outside of a system that's predatory like this, outside of a system where the rich will get richer. The Fed will create moral hazard. They will blow bubbles, and then they will bail out their friends at the expense of you and I. So basically, a portion of my savings should be in gold and silver. And what's your IG? That link goes to a skincare page. That's weird. Oh, wow. I'm glad you just said that. That's weird. Thank you for telling me that. I didn't even know that it went to a skincare page. Oof. Give me 1 second. Wow, I did not know that. Thank you for correcting that. Common sense. It's hard to type with my iPad in the way. I'm glad you told me that. No wonder so many people probably have been clicking on that link and giving this person followers. Thank you for correcting that. And thank you for the donation. I did not know that. There we go. I just posted my Instagram in the chat. Thank you for that. I need to go back and correct that immediately. So basically, a portion of my savings should be in gold and silver. And what's your IG? That link goes to a skincare page. Of course. And that goes back to balancing a portfolio. When you're investing, I tell people this all the time. You have to have hedges in place. For example, the stock market is always, if the stock market's in a bull market, it's always going to outperform gold. It just is, right? Like Tesla is going to appreciate faster in a bull market than gold is going to appreciate. You own gold as a hedge. Gold is all about preserving purchasing power over time, right? So when you're structuring a portfolio, let's say, again, I have, over the course of my entire investing career, I'm going to have $500,000, right? That's talking about 401ks, working, savings, etc. By the time you hit 45, 50, 55, if you're doing the right things with your money, you should accumulate a decent size portfolio. And 20% to 30% should be in gold and silver, whether it's in a paper fashion or whether it's in the physical, precious metals. I prefer owning the physical precious metals because there's a lot of games and gimmicks that goes on with the paper market, similar to what's happening in the banking institution. So now how much you want to allocate all depends on, where you are in retirement. Are you in the place where you want to preserve capital? Preservation of capital matters? Then yes, you may want to bump up your allocation to gold and silver because you want to preserve purchasing power. But if you're young and you want to make some money, right? You're not going to make a lot of money in gold and silver, right? You're going to make more money by shorting the market, by playing in inverse ETFs, by investing in different cryptocurrency projects, by investing in real estate, right? Because you're trying to build money. And that's why I keep trying to tell you guys, it's called personal finance, right? You have to figure out where you are personally. And a lot of people miss that. Like, if you have wealth and you're trying to protect wealth, then you want to be investing in things that are going to outperform inflation. And they don't have a lot of risk to the downside. Like, if you look at most downturns and you look at a chart of gold, gold does not crash the way that stocks crash. You don't see 30, 40, 50% drops in gold as quickly as you see that happen in the stock market, even on a downturn. So it's a way of, kind of arbing out a lot of the volatility in your portfolio. And I think a lot of people miss that. Like, gold and silver is a hedge, and it brings some balance and stability to your portfolio. But in the long run, if you're trying to make money, you want to be investing in speculative things, and that's where speculation comes into play, right? Like, gold and silver is a hedge against your government. It's a hedge against inflation. Then you have speculation, right? I'm speculating in Bitcoin. I don't know what Bitcoin may become in the future. I know what I'm hoping it will become. And I understand that I'm investing for particular reasons. Now, if something happens that changes my opinion, then now I get out of gold. I get out of Bitcoin. Like, if I see a 51% attack happen in Bitcoin and they're able to roll back the chain, I want to get out of Bitcoin, right? If I see the developers begin to start adding things to Bitcoin or changing certain features in Bitcoin that I don't agree with, okay, then I'm out of it. But until I see something like that happens, then I have my bullish case as to why I want to be in it. It's the same thing with Tesla. Like, if you're investing in Tesla, you want to see certain metrics get hit over time, right? Like, right now, today, Tesla's a garbage company. They have great products, but the company is garbage. But you're investing in the idea that Elon Musk is going to turn it around and he's going to make the company profitable and they're going to increase market share. That's the investing. Like, you don't invest for what the company is today. You're investing for what it can become in the future. Right? So you're investing at low prices, hoping that in the future the company or the asset can appreciate because of them becoming more valuable. What are your thoughts on Forex? I've mentioned that before. I'm not a fan of Forex at all. That's just not. It's a lot of, from the trading side, there's a lot of counterparty risk. When you're dealing with these offshore brokers, and like, even if you can make money, it's hard to get your money out. In the US, they don't give you a lot of leverage with these brokers. I believe that the most leverage you can get back when I was trading was 50-1, which makes you go to offshore brokers where you can get 250-1 leverage. But the problem with these offshore brokers is many of them, they steal your money, or they lock your funds up. So, and then there's not a lot of, they talk about the Forex market being a $5 trillion market, but that's not the actual trading market where you're trading at. There's a lot of dark pools and dark markets in Forex, and it's just not an efficient market. There's a lot of stop hunts that happen where they'll come in and run your stops. A lot of manipulation that happens in those markets. I like futures. Futures is an efficient market. There's tons of liquidity. You can see all of the bids and offers, so you know where all of the big players are at. There's no hidden liquidity anywhere, and it hasn't been ruined by high frequency trading and banking and big banks. What do you think about silver? Overhyped or underpriced? Underpriced. If you look at the gold to silver ratio, silver is the better investment. If you want to make money as well as preserve capital, silver is the best place to put your money because it has industrial uses and its growth. The gold to silver ratio is just grossly out of whack. So you definitely want to, if you want to speculate as far as making money, silver is the better place to go. Is the government trying to usurp the crypto market by having their own and try? Of course. The geek surgeon, of course they're going to do that. Think about it, guys. You don't try to overthrow a banking system and think that they're not going to attack back. So many people in the crypto space, they don't understand that. Like that's like being in a fight, right? You really think that you're going to punch a person and they're not going to punch back? Like, of course they're going to fight back. So when we're trying to, create this new system, of course they're going to try to manipulate the price. Of course they're going to try to, roll back the chain. Of course they're going to try to affect the mining prices, affect miners with with electricity costs, or trying to say that mining is bad. Like, of course they're going to attack Bitcoin back. It's a fight. And I expect more. I expect the government to do more. I believe that at one point they're going to try to make it illegal for you to transfer Bitcoin to your bank accounts. I believe at a certain point, like we already see YouTube doing this as well. Like Ivan on Tech can't stream, right? We see YouTube where basically, like, if you're streaming about Bitcoin, which is why you never see me put Bitcoin in the title of my videos, because if you're streaming about Bitcoin, you'll get a channel strike, right? So you're going to start to see the system. Like, you have to understand you're dealing with a system that does nothing but oppress people. Like literally manipulates and oppress people. So they're going to fight back. Again, if you understand the power of what Bitcoin is, this is our last hope. Bitcoin and cryptocurrency is going to be our last hope of freedom. If you go back and read George Orwell's 1984 and Aldous Huxley's A Brave New World, right, we're getting a combination of both. Cryptocurrency is our last chance at freedom. Because when you understand machine learning, when you understand technology, it's only going to get worse. This beast is only going to get more aggressive. And they have tools and they have technology that is going to blow your mind. So we only have a few more years to really figure this out before, it's over. Because at this point, they're going to make vaccinations mandatory. You can already tell. And listen, I'm not an anti-vax guy, but I'll be damned if I'm just going to put some new vaccine in me. Bill Gates is already talking about putting a microchip in you. And guys, I'm not a conspiracy theorist. I can pull the article up where they're saying to you that they're going to put it's a certain type of chip, not in your hand. It's like an adjustable chip that goes in your body, and it can basically scan your whole body to see what type of diseases you may have. Guys, it's here. George Orwell's 1984 is here. Aldous Huxley's A Brave New World is here. It's just a matter of if you can see it or not. It's in your face. Elijah, how long can it go on printing, and where do you see us 10 years from now? That's a good question. Will the Fed just say, you know what, I don't want to play this game no more and just not bail anyone out? I mean, I don't believe it. I don't believe that will happen anytime soon, not based upon history, but, who knows? All I can do is go off of what's been happening, what I've seen, and invest accordingly. Now, again, like I said, guys, if something changes, then I will change mine. And that's another thing. People say, oh, you're a flip-flopper. No, I'm an investor. And as the facts change, my opinion changes. I'm an investor. As the facts change, my opinion changes. So as of right now, the facts are government's printing money, running $1 trillion deficits. I want to buy gold and silver. I want to be in precious metal mining stocks. Right? Now, if the facts change and the Fed stops bailing people out and the government raises rates and the Fed raises the government raises taxes and the Fed raises rates, well, then I'm going to sell my gold and silver and I'm going to get out of inflation-based investments because we're going to experience deflation. But has that happened yet? No. When that happens, then I'll change. Hope that answered your question, Brendan Hicks. What about offshoring money in Swiss and Caribbean bank accounts? I have no idea about that. I don't know anything about that type of stuff. I hope I answered your question, Horse Magic. I don't know. I'm kind of behind. I'm reading the older questions. I spoke about gold and silver. I did that already. I'll put my IG in there. I'll paste it again. I'll post my IG again. That 6 trillion QE is so damn depressing. I feel backpiled. Great show. Thank you, Jesse Denver. Wow, good info. I'm here to learn. Thanks for the host in the chat. No problem, Proverbs. How much does a gram of gold cost? I have no idea off the top of my head. I would have to pull that up. Eli, I never hear you mention the other side of money printing. The Fed doesn't just print money. They sell treasuries debt to raise funds. If they didn't, the dollar would plunge overnight. I'll probably do a live stream about that. You have to also understand, like, you have to structure a show from the standpoint of where people want to listen to it and watch it. Like, if I get extremely technical and I go into all of the intricacies, people may not want to watch it. So that's another reason why I don't really get too technical and I don't dive too deep, because, listen, you want to keep things surface level to maintain a watch time. I have a show as well, Mark J. So I can't just get too deep. I got to kind of bring people along where they're at. And there's 196 of you watching. Please like the video. Bank of America has already banned people from depositing to Coinbase. See? Exactly, Alexander Wilson. We're going to see that happen, and just be prepared for it. Like, it's going to happen. I don't know anything about Swiss bank accounts, guys. I wouldn't be able to tell you anything about that. No, they would never. They would never EMP the entire planet. There's other ways you can attack Bitcoin rather than EMPing the grid. You don't have to attack the grid to attack Bitcoin. You can just attack the fiat. You can attack the fiat gateways and just make it illegal to deposit any Bitcoin and go after all the exchanges. That's all they have to do. If they wanted to affect Bitcoin, they just go after the exchanges. Thank you for the donation, Bernie the Bro. We bailed out the companies that don't pay Fed taxes. I agree. 5G, your opinion, and should I invest? Of course. I don't know too much about 5G. I just understand that it's technology. I hear a lot of conspiracy theories about it, but anything that's based around technology, I want to be investing in, like 100%. 100%. So Africa 365 asked a really good question. What backs cryptocurrency, right? So let's take a step back. As far as a medium of exchange, what backs Bitcoin is the people who use it, right? Like, I find Bitcoin valuable. So if I wanted to do a job right now, right, I don't want to get paid in dollars. I want to get paid in Bitcoin. And I want to transact in Bitcoin. So for me, what gives Bitcoin value and what backs it is the fact that I'm willing to work for it. I'm willing to trade my services, my labor, for Bitcoin. And there are other people who are willing to do the same. So that's what backs Bitcoin, the same thing that backs all money, right? The faith that people use it. The difference between me using Bitcoin is I'm using it in a free market way. I'm freely saying, this is what I want to get paid in, and this is what I want to transact in. You didn't have a choice as to what you want to use as money. The government told you you're going to use the dollar. You didn't get it. You didn't have a choice as to what you could use as money. You were born into debt. You were born into bondage, and you were told that you have no say in what they do with your money. You have no say in who they bail out. You have no say in where your money goes. You have no say in the value of your money. You have no say whatsoever. See, in the Bitcoin community, I have say. I have rights. It's a democracy. I don't have to trust anyone. I can verify it. So for me, what backs it is the fact that I have faith in it, like all money. But I chose that money. See, I chose it. Now, some people choose Ethereum. Some people choose Ripple. The marketplace should determine what is money. You should determine what is money, not your government. Now, as far as what makes Bitcoin stable as a technology, it's physics that backs Bitcoin. It's code that backs Bitcoin. It's math that backs Bitcoin. It's scarcity that backs Bitcoin. It's the network effect that backs Bitcoin. It's hash functions that back Bitcoin. It's game theory that backs Bitcoin. Things that can be proven, that's tangible. So when you, again, and a lot of people miss that with money. They say, well, what backs your dollar? Right? Because the only thing that backs your dollar is debt. And the fact that your debt is denominated in dollars. Your mortgage is denominated in dollars. Your car loan is denominated in dollars. So it forces you and puts you on a hamster wheel to get you to go out here to work for more dollars. So now you have to ask yourself a question. Which financial system do you want to be in? Do you want to be in a system where they can print money out of thin air? Do you want to be in a financial system where they can raise your taxes, but the companies that pay no taxes get bailed out? Do you want to be in a system where every time you swipe and use your card, you get nickel and dimed and feed? A fee here, a fee there? Do you want to be in a system where you've lost 90% of your purchasing power? Do you want to be in an inflationary system where literally money is debt and they have to create more debt? Or do you want to be in a system that's deflationary? That you know how much Bitcoin is going to be in existence. That you know how much Bitcoin is currently in existence today. I can go and look at the Coinbase transaction in every block that's created, and I can see how many new Bitcoin is in that transaction. If I'm a merchant and I'm selling goods and services, do I want to use PayPal, where a person can do a chargeback 30 days from now, 90 days from now if they use my product? Or do I want hard money, where once that transaction gets put into a block and that block gets 2 or 3 or 4 confirmations, that money is mine? So think about, as a merchant, how much power that gives you, where a person can't do a chargeback. It wipes out fraud, because you only can spend Bitcoin that you have access to, right? You have to, if you don't have the private key, you can't spend that Bitcoin. And if you don't have the private key, you can't access that Bitcoin. So I know, as a merchant, when I'm taking this payment from you, I don't have to guess that you have this money on your credit card and you're going to try to charge it back to me. No, I know when I sell you this good and service and it hit the blockchain, it's never going to be reversed, because the blockchain is immutable. Once it's on that chain and you get 3 or 4 confirmations and there's 3 or 4 blocks after that, it's over. That's the power of cryptocurrency. That's the power of a blockchain. Transparency. Where you don't get this funny business where you just can, shift money here. Like right now, someone's being bailed out through the repo market. When you see the government, let me not say the government, when you see the Fed injecting $150 billion every day into the repo market, someone's getting bailed out. We don't even know who's getting bailed out with our tax dollars, which is inflation dollars. We don't even know. You don't even know who's getting bailed out with your money. And then they're going to take that money and fire you and get a computer to replace you. So do you want to be in a system like that? I wouldn't. And this is the power of what a blockchain is going to bring to you. Think about outside of Bitcoin. Think about if you're running a manufacturing company, you want to be able to track your goods and services. You want to cut down on fraud, where you can be able to track something on a blockchain that's immutable, that can't be changed. And you can know this purse was made exactly here and it was shipped there. You can track it and get rid of all of the fraud and the games and the gimmicks. Think about it. Hawks Magic said, can we send you gifts instead of PayPal and Super Chat? The Super Chat's good. The Super Chat helps me invest in the show. It helps me invest in the equipment. It compensates me for my time. Think about like the Creature from Jekyll Island. Let's flip over to this book, right? When I read this book, I want to show you something. This book is almost 1,200 pages. It's 1,279 pages, right? So I have to sit here and spend hours reading this book and then figuring out how can I present this information to you in a way that will be entertaining enough for you to watch it, right? So I have to maybe read passages 2 or 3 times, right? Then I have to read another book. Then I have to read a blog. So I would prefer not a gift. I'd rather just take the money. Right? I'd rather take the money because it compensates me for my time. It compensates me for my creativity that I have to put into things and think about things that's going to actually, do things. The reason why I don't take Bitcoin, I would love to get paid in Bitcoin, but you can actually track people with their public address. And there's a lot of crazy people on YouTube, and I don't want them tracking me. So when you give me money, when you donate to me, I immediately convert it over to Bitcoin. Like if you send me money through Cash App, I just go on Cash App and buy some Bitcoin and then I can send it to myself. But like if I put my Bitcoin address here, it'll allow you to be able to track me and track how much money I have in my Bitcoin wallet. So that's why I don't like having that stuff there, because you don't really want people watching your pockets. So I wouldn't want to be transferring that type of stuff to my hardware wallet and stuff like that. No, Bitcoin is pseudonymous. It's not private. That's the value of Bitcoin. you don't know who's behind the public address, right? Like, you have no idea. But if you see me giving you my public address, then you're going to know it's me. Like, because you're going to see me here on YouTube, and I'm going to be putting my public address. If right now, if I go to Nike, and let's say that Nike.com takes Bitcoin, and I buy some Bitcoin with my wallet, Nike doesn't know who I am, right? Like, I don't have to identify who I am. I just run a wallet. I download the client software and I run it. But if I'm on YouTube with my face and I'm saying, hey, it's me, then you're going to be able to track me. Now, if I didn't take Bitcoin and I send it from that address to my ledger, you're going to be able to track that across the blockchain. And then now you'll be able to see how much Bitcoin I got in my ledgers. So now I could do Monero, but the problem is Monero doesn't have a lot of daily volume, and people don't really know how to buy Monero and stuff like that. So I just keep it simple. I take the cash when you give me the cash, and I just convert it into Bitcoin on my own. And that way I don't have to worry about people being nosy and trying to see how much Bitcoin I have in my wallet. Bitcoin's never been hacked. Bitcoin's never been hacked. The actual Bitcoin network has never been hacked. There's never been a 51% attack on the Bitcoin, a successful 51% attack on Bitcoin ever. And the Bitcoin network has been up and running now for 11 years. It's never been successfully 51% attacked where someone can roll back the chain. Now understand, when you see Bitcoin being hacked, and I hate even using that term, you see a third party. I want you to think about it. You see a third party being hacked that's holding Bitcoin. That's the difference, right? A third party is hacked that holds Bitcoin. So what does that mean? An exchange is holding Bitcoin and they get hacked. That wasn't Bitcoin that got hacked. That was the exchange that got hacked, which goes back to my point of, as I told you guys before, not your keys, not your Bitcoin. Not your keys, not your Bitcoin. If I hold my private keys, you're not hacking my Bitcoin. Because you have to understand that your address is hashed from your private key to your public key to your address, right? In the SHA-256 hash, it's a one-way function. You can't go back. So like, just because you know the person's public address, you can't deduce what their public key is or what their private key is, right? This is cryptography. Like, if you could do that, you would be a billionaire. Like, if you could figure out a way that you can get someone's private key through the hash of their public key, you would be one of the greatest cryptographers in the history of the world. I mean, it's been impossible, right? SHA-256 is a one-way function, right? You can get the end result, but you can't go from the end to the beginning. So it's never been rolled back ever, And then that's where the whole idea of the supercomputers come into play in quantum computing. Can a quantum computer basically break to SHA-256, where they can deduce what the input is from the output, right? Because when you run something through a function, it gives you an output. You give it an input and it gives you an output. The power in Bitcoin is that you do not know what the input is because you have the output. That's what SHA-256 does. It's like a blinded, for lack of a better word, like a blinded transaction. What a quantum computer may be able to do, and this is the key, may be able to do, if they get enough qubits, is that they'll be able to then break SHA-256, where they can take the output, the hash, and deduce that to the public key and then to the private key. But again, this is stuff that you don't have to worry about because it's never happened in the history of computer science. So if it hasn't happened, you don't need to worry about it. Like, I worry about things that are practical. Brandon Hicks, thank you for the donation. Elijah, when I go and get my filet-o tomorrow with cheese for 48 cents, how do you think this plays out? They're going to look at you like you're crazy, right? When you go in there and you show them this McDonald's picture, right? And you showed them these large fries for 26 cents and this hot apple pie, they're going to say to you, man, you're stuck in the wrong time period. You need to get up to date. What do you think about learning how to trade Forex and day trade full time? Please let me know. Thank you. I don't think it's a bad idea if you want to try it. Understand that 90% of traders lose money. And understand that as you start trading, you're going to lose a lot of money and you're going to lose a lot of sleep. There's 175 of you watching, guys. Hit that like button. Helps the content rank. What do you think about learning Forex? I think day trading, I've been trading for a while now, and I've tried a lot of different trading. The Forex market is heavily manipulated. Heavily. When I say that it's heavily manipulated, it is heavily manipulated. If you're starting out, I would really, really encourage you to start with futures. Number one, you can demo trade. That's the most important. You can demo trade. And you can also trade currency pairs on futures platforms as well. But the number one, even if you want to live trade, you can trade with $500. Like literally $500, you can open up a futures trading account. So the market is a ton of liquidity. It's a clean market that trends well because there's a lot of money in there. You don't get these crazy fluctuations in futures. Well, now you do because of what's happening with the volatility now. But in a normal functioning market, you don't get these like flash crashes in futures because it takes so much money to move the futures market. So once it starts moving, it tends to trend in a direction. So it's easy for you to get 4 to 5 to 10 ticks. And that's all you need if you have a decent sized account to make money. So as far as like a day trader or intraday trader, futures to me is this a superior product. It just is. Like if to make 10 ticks on the S&P is easy. I mean, it's like literally like easy. You can have a simple moving average crossover strategy and do that. As far as Forex is concerned, I'm not a fan of Forex at all. I've seen there's too many scams, there's too many schemes, there's too loose regulations. Many other brokers, they trade against your positions. It's not a good market. And as I said before, there's a lot of dark liquidity. Like that's another thing with, like I have tools, for example, when I trade futures, right? I can see all of the liquidity in the market. Like there's level 2, I can see level 3. Like I can see all of the order flow in the market. So I can see when a certain bid gets hit. If they're coming in, they hit that bid for 700, 800 contracts, and they hit in the bid, and price doesn't drop. I know that there's a big buyer there, and he's just soaking up all of that liquidity. You don't get that in the futures. In the Forex market. You only can get that type of stuff in the futures market, where I can see the entire price ladder, 30 levels above and 30 levels below. You're not getting that in future. I keep saying futures in Forex. Only in futures can you see the entire price ladder. So to me, futures is the best place to go. Again, doesn't take a lot of money to get started with. Ton of education, easier market to learn, and less manipulation. Because once you start dealing with the high frequency traders with stocks, forget about it. Too much manipulations with the HFTs with stocks. Casper147, how do you feel about crypto.com, Crow and MCO? How do you feel about earning interest on your crypto? And could you check your IG message? I messaged you a while back. I don't know. Let me see what crypto.com is. If it's a lending platform, don't do it. I don't trust any of those lending platforms. Let's see what you're talking about. CRYPTO. I cannot type with this thing in my way. It's hard for me to type, guys. I have my iPad blocking my keyboard. Let's see what this is. Crypto.com. Buy, sell, and pay with crypto. Looks like an exchange. It looks like it's just a regular exchange, Casper 147. It goes back. Someone asked me that a question the other day. I think they were asking me about Kraken. Someone asked me about Kraken. Guys, there's so many different wallets. There's every day someone's coming out with a different wallet as far as storing your Bitcoin. It goes back to something very simple. Does the exchange or does the website or does the app give you access to your private keys? If the exchange doesn't give you access to your private keys, if the app doesn't give you access to your private keys, if the client doesn't give you access to your private keys, You do not store Bitcoin there. Not your keys, not your Bitcoin. I don't care what it is, where it's at. It's very simple. I don't care if it's a Samurai wallet, whatever the case may be. If they let you hold your keys, good. I believe Samurai wallet allows you access to your keys. I believe that Electrum allows you to hold your keys, your own keys, running a full Bitcoin node on Bitcoin.org. I have a video where I show you how to do that. Now, as far as just buying crypto, if you just want to buy cryptocurrency from there, nothing wrong with that. Nothing wrong with just buying crypto. When you buy it, you need to be sending it to a wallet that you have access to the keys. Not your keys, not your Bitcoin. And I have a whole video right here. I'll show you how to download the Bitcoin Core wallet and run a full node. Keep it simple. Never make things complicated for yourself. Never make stuff complicated for yourself. They have crypto Visa and debit cards. Oh, then yeah, it's okay if that's what you want to do as far as cashing out. I haven't looked in it. Because I don't sell any of my crypto, so I don't really know about using those third party things because I don't sell any of my crypto. And if I wanted to, I would just use Coinbase. So, but yeah, I mean, if they have a debit card feature and the fees are low, then use it. I know there's another place called BitPay. I've used BitPay before, years ago. Like that was like years. Man, I don't probably remember my password, but I don't really sell any crypto, so I haven't sold any of my Bitcoin for fiat. Man, I can't even think. Like, when's the last time I've sold? I can't even remember the last time I've sold Bitcoin for fiat. It's been years. I'm talking about like I used BitPay years ago. Like probably like I don't know. Dan, that's a good question. I would have to go back and look through my email. I haven't sold any Bitcoin, any Ethereum. I haven't sold any Tezos. Like anytime I sell a crypto, like I'll hold it in my wallet to sell it to buy another crypto. But I haven't sold any crypto for fiat dollars. Like I don't want any fiat dollars. As soon as I get paid in fiat, I'm looking to immediately convert it into an asset, whether it's gold, silver, Bitcoin, Ethereum, Tezos, etc. No, the only exchanges I've used, I keep it really simple. I use Coinbase. I use Binance. What other exchanges I've used before? I've used Bitfinex. And I keep it simple. Like, I mean, there's so many different exchanges popping up. And that's what I was trying to say to you guys. Like, the crypto space is one of the best spaces to be into because every week there's new innovation, there's new products, there's new services. That's why I laugh at people when they try to tell me that Bitcoin is a scam. If you understand the amount of capital that is coming into Bitcoin, you would never in your wildest dreams say that Bitcoin is a scam. There are people that are quitting executive jobs where they're making $6-7 million a year to come into Bitcoin. If you look at the size of the mining farms where people are deploying hundreds of millions of dollars into the mining space, making mining more efficient, going and buying up land and dams and, hydro mining and solar mining. If you knew about the amount of engineers and developers that are coming into the Bitcoin space and coming into the Ethereum space, like I'm talking about, these are highly intelligent and successful and credentialed people. These are not just your run of the mill, hey, I'm trying to make a quick buck, Ty Lopez, I want to sell you a course. I'm talking about these are people that like they have reputations in the computer science realm and astrophysicists. Like these are people that are serious people and they're working in this space. You don't leave a job in investment banking where you're making millions of dollars. You don't leave a job where you are a bioengineer and you're, engineering, different types of technology in the biotech space to come into cryptocurrency unless you understand that this is the future. And this is what I'm trying to get you guys to understand. You are right now, this is the best time to be getting involved in the whole blockchain space, the whole cryptocurrency space. And if you've seen the amount of people, the serious type of people this is not no Boyce Watkins that's getting involved in crypto. See, people like Boyce, they're just opportunists. They're not working on the infrastructure. If you see the type of people that are behind crypto, that are working on developing tools and, the infrastructure and the layer 2 and the layer 3 and working on Lightning Network and working on DeFi, you would never in your wildest dreams say that Bitcoin's a scam. You would be doing everything you could do to learn how to code, to learn how to develop. You would be doing everything in your power. Like if Bitcoin dropped to $1,000, someone asked me the other day, I would go out here and I would start prostituting. I'll sell my kidney. I'll do whatever it takes. I'll be buying every single Bitcoin you could think of if Bitcoin dropped to $1,000. I'll sell everything in my house if Bitcoin dropped to $1,000. I'll buy it all. Like the guy said, you have Mike Novogratz, you have Tim Draper. I mean, you got the guy Raul from Real Vision. Like if you really only a fool. And again, I'm not saying you're a fool because a lot of you don't know any better. I'm saying you would be a fool to know about this. You know about it. And you got a chance to participate in it and not know about it. Because you have serious people behind this stuff. This is not, some, Johnny come lately. Like you just, if you knew that, you would understand that 100%. Where do you buy your gold from? I buy gold from a multiple of different places. But the easiest place to buy gold is from APMEX. Mike Maloney sells a lot of gold. For those of you who do not know who Mike Maloney is, I'll pull him up right now. I'll show you who he is as well. Mike Maloney. This is how I first got introduced to gold and silver, was through his book with Robert Kiyosaki, the Guide to Investing in Gold and Silver. I encourage you to go watch a lot of his content. I mean, think about this. And this is how long I've been doing this for. I've been doing this for a long time. If you go back to his oldest video, Mike Maloney's oldest video is 9 years ago. And I first came across Mike Maloney with Robert Kiyosaki when he had the book, The Guide to Investing in Gold and Silver. So he sells gold and silver. Peter Schiff sells gold and silver on his website. But again, you have APMEX, you have JM Bullion, or you can go to basic shows that they have, like local trade shows, and people bring because once you get into the gold and silver game, there's like collectibles where like they have more value than just the regular spot price because they have a higher premium because they are collectibles and they're like rare. Give me 1 second. Let me take a sip of water. My mouth is starting to get dry. And like this video, guys. There's 167 of you watching this. What base would you start a bank on? I don't understand your question, Africa 365, as far as where would I want to start a base. Thanks a million for the info. No problem, Chris Stewart. The premiums are nuts right now because there's too many orders for bullion. Yeah, and but that goes back to liquidity, right? And I said that this is why I laugh at people, and I'm not talking about you, Manic Tiger. I said Magic Tiger, Manic Tiger. When you think about liquidity like this. There's a party going on. And I'm talking about this party is pumping. It's popping. Every celebrity you can think of is at that party. And everyone wants to be in that party. So everyone's packing into that party. Now the occupancy, the max occupancy of that event, at that venue, is only 100 people. And there's only one way in and one way out. Well, everybody wants to be in that party. So now it only can hold 100 people, but you got 5,000 people in that one party. All of those people represent people crowding into a trade or wanting to get into a trade. And then something happens and everyone wants to get out that trade. Something happens at that party. Everyone wants to get out. The problem is there's only one way out. And that one way out is a regular door. That's liquidity. That door represents liquidity. And when everyone tries to get out of a trade at one time, and there are no buyers, there's no one willing to step in and bid, you get that crash down. You get a crash. Because no one's going to step in and buy because there's no liquidity, which creates prices to go down very fast. Now, you can look at it from the inverse. That's the same thing now with buying something. The smart money like you and I, we got to the party early. So we don't have to worry about the party being too crowded. We got to the party early. We partied it up. And as soon as we seen the crowd coming, that's when we look to get out. So see, the smart money's been buying gold at $800. The smart money's been buying gold at $900, at $1,000, at $1,100. And then the herd's going to come. And they're going to push the price of gold very quick. It's going to be like Tesla. You're going to see it like a hockey stick. You're going to see one day you're going to wake up and gold's going to go from $2,000 is going to probably pop to $4,000 overnight. And that's when I'll be looking to sell. When you see that hockey stick happen, that's when I'll sell. The same thing happened in Bitcoin. When you saw Bitcoin go from $3,000 and in a matter of weeks it hit 20K, that's the time to get out. Because that's dumb money coming in now. And when the dumb money comes in, that's when you sell. There will be a time and day where I will sell my gold and silver. When the dumb money comes in, the smart money's buying now. The smart investors are getting in now. Smart money gets in early, builds a big position. Dumb money comes late and you dump on dumb money. That's the name of the game. Pendulum. Things go from undervalued to overvalued, then overvalued to undervalued. That's why I said I wouldn't be looking at any stock. I would not be looking to get into the stock market until the Dow hits around 16,000, 17,000. That's when I would start looking to be buying stocks. For me personally, is when I would be looking to buy. Or if you're going to dollar cost average, then yeah, it doesn't matter when you buy because you're going to be allocating capital over time. And that goes back to personal finance, right? Like if you know every month you're going to be investing in a stock market, then you don't care where you buy at. And that's the same thing with Bitcoin. Like I don't care if it's 3,000, 5,000, 6,000, I'm buying Bitcoin. Because as I dollar cost average, it brings down my risk and it brings down my entry price. So when Bitcoin crashed down to 3,700, I was buying so much. Coinbase had to put a limit on me for the day. I was just buying because I don't care if Bitcoin goes to 10K, 15K, 20K. I'm not looking to sell there, right? Because now we had 20K. We had that blow of top. The next blow of top, I'm looking at 100, 150K. And then that's when I'll start selling some of my Bitcoin. Because that'll mean dumb money's coming in and I get out. It's nothing wrong with that either, Manic Tiger. Remember, I'm a day trader. I mainly trade S&P futures and crude oil futures. So I know that I do the trading game every day. So that's how I make a living. I have $5,000 saved. What do you think I should do with it? I'm thinking of learning how to trade Forex and use a small amount to trade with. And after learn how to trade in the demo account. Will you sell back to APMEX when that time comes, or where would a good place to sell back to? Well, I live here in New York City, and there's a ton of bullion trading spots that I can go and trade at. So I would just go right here locally and sell it because you get better deals. So that's what I would go and sell. Like in New York City, like right down on I think it's if I'm not mistaken, it's 53rd and Avenues of America. There's an entire whole floor, a bullion dealer. I mean, this guy has everything. Like he has an entire floor in a big office building. I'm talking about he has everything you can ask for, and he has good prices. Nothing crazy. I would just go there and sell it. That's where I would go and sell it at. Because I can get my cash right there on hand. But as far as John Joseph, $5,000 isn't a lot of money. I don't want to. I'm not being a dick or anything like that. Trying to be rude, but like $5,000 isn't a lot of money. It just isn't personally. And if I was you, I would encourage you to, number one, don't fall for the trick of buying courses, right? Most of the stuff that these people are going to teach you in these day trading, swing trading, options trading courses, you can find for free online. What you should be doing, John Joseph 1990, is say to yourself, for the next 3 to 6 months, I am going to trade in my demo account. Do not spend any of your money on any education. Do not spend any of your money on any products. Go and open up a demo account and play around with some free strategies. There's if you want to do Forex, there's a site called babypips.com. They have a forum. anything you want to learn, any strategy, any combination of indicators, I'll give it to you right now. Babypips.com. You can learn for free. I am a huge proponent in learning for free first to see if you're interested. Then once you figure out if you're interested, then go and spend some money. Because what happens to a lot of people, that's the website, babypips.com. Right? As you can see right here, babypips.com, this is all about Forex. And any indicator you want to learn about, any strategy you want to learn about, I'm telling you, go to this forum and it's all in here. Where is it at? They have education, as you can see, how to trade Forex, trading quizzes, Forex glossary. There's the forum right here. Go in there and read the forum. I spent hours on this site when I first got started. And I'm telling you, it will save you a lot of money. It will save you a lot of headache because most of these courses are nothing but a bunch of hype. And they're giving you stuff that you can learn for free anyway. So rather than wasting your time and wasting your money buying courses and spending thousands of dollars, I'll save you. I just saved you thousands of dollars. I just saved you thousands and thousands of dollars because I was once young and dumb and I brought some courses that I wish I never purchased before. The Hakanashi candles are beautiful candles because they show you the trend. I use a similar bar. I use dynamic bars. They're like dyno bars. There's a guy who talks about it. I use similar bars to a Hakanashi bar, but it also factors in the volume. But again, my trading system is heavily based off of Hakanashi bars. Or I hope I'm saying it correctly. There's another guy who talks about dyno bars. He has the similar bars that I use. But yeah. Manic Trader is telling, I keep saying Manic Trader. Manic Tiger is telling you correctly. Hakanashi bars are very, very important. But again, go here, go to the forum, register. It's free. Don't buy anything. Spend the next 3 to 6 months, play with some free strategies, and see if trading's for you. I've seen this business eat a lot of people up and spit a lot of people out. I've seen a lot of highly intelligent, bright people come and within 3 months they blow their account and they're nowhere to be found anymore. I've seen a lot of people come and go in day trading. Just trading in general. Finance eats a lot of people up. You are competing with the best and brightest in the world. And then now you're competing with machines that can execute hundreds of thousands of trades in a blink of an eye. You're competing with high frequency traders. Wall Street is one of the most competitive places in the world, and they have the best technology, the best infrastructure, the best information. So you need to make sure that you are taking your time out to really, really see if this is for you. Because I'm going to be honest with you, for most people, it's not. This is a tough business. Very, very, very tough. I think that $5,000, keep it in your pocket for right now. Go learn some free stuff. Go do some demo trading. And if you can make money in a demo consistently, if you can be consistently profitable over the next, over a 30-day period, over a 60-day period, consistently profitable, and you've taken over, 200 trades for a day trader, that should be nothing. Then yeah, you can go and start trading live, So take your time, man. Take your time. Like really, really take your time. Ease your way into this. Do not fall for these magic systems that people have, these moving average crossover systems. Be careful with that. Joey Crack said TD Ameritrade also has good free courses for beginners. Paper trade on TD Ameritrade 2 for free. Yeah. When I first started trading stocks, I used to use Thinkorswim. Thinkorswim has a really, really good platform. But for traders who want to execute with hotkeys, Lightspeed's the best place to go and trade. I love Lightspeed. They literally have machine algos for trying to trick us. Yeah. And they'll run your stops. I've seen it happen. I've seen the market makers, they'll come down, they'll smack the bids, boom, 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 suck up that liquidity, and then take the price right back up. So, just I want to give you that information. So I hope that answers your question, John Joseph. Let's see, everyone who donated, I answered Casper's question. Brandon Hicks, I answered your question. Bernie the Bro, we bailed out the companies that don't pay Fed taxes. I agree. Bail out. No company should get bailed out. Thank you guys for the donations. Yeah, that's everyone. I answered everyone. I answered Cardone Capital. It's 157 watching, guys. Hit that like button. I answered Cardone Capital's question last video. I answered again. I don't see anything wrong with laying people off, right? It's a part of business. You have to lay people off, right? That's just how business works. You have to lay people off if you can't make money, or you're just not profitable with that size staff, because you have to understand the economy is going to contract, guys. We're going into a depression. I keep trying to tell people that even if it's technically not a depression, you're going to have dislocation in the economy where for like certain people, they're going to feel like they're in a depression. Other people are going to feel like they're in a recession. And then some people are going to feel like they're wealthy, right? Like people who shorted this market, they made big money. People who are going to get long when the market booms, they're going to make money. But for most Americans, it's going to feel like a depression. And the economy is going to vastly shift, right? We're not going to go back to the way things used to be. It's like 9/11. After 9/11 happened, like the whole TSA and all that, the body scanners, like the world is going to fundamentally shift and change as far as your freedoms and movement and stuff going forward. Now, as far as Cardone Capital is concerned, Grant Cardone is smart enough to see that, okay, things are going to change, financially and economically. So I can't hold the same staff that I had before. So I don't see anything wrong with that, right? Now, when you compare Grant Cardone to a Jay Morrison, like, number one, Grant Cardone's made money for his investors, right? That's very key. Like, you invested money with Grant Cardone, he's made you money. That's number one. He returned in money to his investors. Jay Morrison hasn't returned a dime to any of his investors. Number two, Grant Cardone has different tiers of investment, and for the most part, he's going after people that they can afford to lose money. Jay Morrison is going into the hoods of Detroit, standing on the corner and telling people that, hey, we're going to buy back the block. Like he's going after the most vulnerable type of people. And that's what's so disgusting about it, is that you're going after people who that $500 that's money that they can use to eat. Like you're not going after people that have income or that have, disposable income. You're going after people who, that tax money that they're getting, like that can pay some of their debt. That can build some of their savings. So, and the people he's going after, they don't really know any better because they don't know about, they're not financially literate. So they don't know, like, a preferred 8% return on $500 is nothing. Like you're talking about peanuts. It's like when you do that, that's like disingenuous, like seriously. Like, for example, and I know I'm not directly answering your question. I'm going to come back to it because I just want to be clear, because I know there's going to be trolls on here like, oh, you only go after black men. You hate yourself. No, I don't only go after black men. I go after black men that manipulate black people. Like, for example, most of my following is predominantly black, right? And I can just look at like my donations, for example, right? I was watching another guy that's in the crypto space, and he only has 8,000 subscribers. But I was looking at his super chat, right? And the super chats were like $50 here, $25 there, $30, like big money coming into his super chat, like $20 here, $25 here, $50 here. And that's because he's talking to a different audience. He's talking to an audience of people because he's in the crypto space, Fed space, talking about gold and silver, but he's talking to a different demographic of people that actually have disposable income, right? Whereas most of the people I'm talking to, I understand that they just don't have the money. And I would be lying to you if I sat up here and told you that if you live in the hood or, you're working at Target, that you're going to buy a gold coin and it's going to change your life financially. I would be lying to you if I told you you're going to buy a course and it's magically going to make you money, because I understand financially, you're coming from a different demographic than other groups of people. And that's just the reality. So when you look at Grant Cardone and who's investing in Grant, these are people that have money. They have disposable income. They're not guys who, they're coming from Detroit. They're coming from south side of Chicago. They don't have money like that to just be given away for you so that you can travel all over the world. You can have all of the nice things. So any person that, who's looking at that from the beginning can see that it was a scheme designed to take money from people who are unassuming and who don't know any better and who don't have any business investing. If you don't have a savings account, you have no business investing. I want to say that very clearly. If you don't have savings, you have no business investing. Right? Investing is for people that have disposable income, not people who just got their income tax. And you're going to go invest in the Tulsa real estate fund. And now here we are 2 years later, and this man hasn't even returned you nothing. At least Grant Cardone gave his investors a return on their money. And, and if Jay couldn't make money when the S&P was up 20% last year, he damn sure is not going to make no money this year. So now you have to start asking yourself, is the Tulsa real estate fund ever even going to produce anything for people? Viable. So, Grant laying off his staff, that's just, a lot of companies are going to lay people off. A lot of banks and hedge funds are going to lay people off. Hospitals are going to lay people off. Airline, that's going to happen, layoffs. Now, is Grant Cardone a con man? Absolutely. Is Grant Cardone, selling lifestyle? Absolutely. Is Grant Cardone a sleazy info marketer? Absolutely. But you got to look at the people who are buying into that garbage too. Like, they have money, but they're still buying garbage. If I see a guy with a jet, I know it's a scam. If I see a person, running, if I see a person with watches on, scam. Like anytime I see a person marketing lifestyle, traveling, women, partying, that's a scam. I know it. Oh, let me not say a scam, a scheme. Let me fix what I said. It's a scheme, right? It's a scheme designed to take your money. It's preying on your ignorance, right? Anytime a person leads with the flash and not the investment, you know what you need to know. You know what you know all you need to know. So that tells you all you need to know. Yes, running a full node takes up space on your computer. My Timex 2X or 2C. Yes, it does. Yeah. My Timex 2C. Yeah, it does take up space. It takes up a lot of space on your computer. So again, running a full node is for people, you got to have a decent computer. I think it takes up like 200, I want to say 200 megabytes, I believe. No, not even 200 megabytes. Let's see. I'll tell you right now. Let's look it up. I don't want to be incorrect. How much? I'll look it up for you right now. How much space does a full node take up? 125 gigabytes. 125 gigabytes to run a full node. 125 gigabytes to run a full node, and it is 2 gigs of RAM to run the node. So 125 gigs. There you go. So I hope that answers your question. Again, remember, running a full node is not for everyone. I'm not saying that you have to run a full node. Well, you have to understand, when you're running a full node, you're downloading the entire Bitcoin blockchain. You're running the entire Bitcoin blockchain. Like, you're downloading the entire blockchain going back to the Genesis block. There's over 600,000 blocks that have been created in a blockchain. So like, you're going all the way back to, January 3rd, 2009, when Bitcoin was, the first Genesis block was mined. So there you go. Now you can run a SPV wallet. I'll do a video on that. I'll show you how to do that later. I'll show you how you can run a Bitcoin client on your phone. I'll do a video on that where you can run it on your phone. But just get a ledger, and you solve the problem right there. Get a Nano Ledger X for $100, and then you have your private keys. I mean, that's the best way to store your Bitcoin anyway. Cold storage is the best way to store your Bitcoin anyway. right? But I'll show you how to do a SPV wallet. I'll probably do that video. You gotta give me a few days. I'll do that video and I'll show you how you can run a wallet on your phone that takes up less space and you'll have your private keys. Most important thing is your keys, guys. You have to have your ownership of your private keys. Ownership gives you access to your wallet. You don't want to run any of these apps that don't give you access to your keys. So I'll take a few more questions. I keep replaying your video on T-Pain. We can all learn from it. No problem. Thanks, Brandon Hickson. Thank you for the donation earlier. And that's my whole purpose. As I said before, going back to like the Grant Cardone thing and the other guys saw, like I know that this isn't going to be a financially lucrative venture for me. I knew that about a month into this. And I realized that it's not really about the money. It's really about, as I said before, and I say time and time again, giving back to people and planting a seed so that you can begin to start making certain changes in your life to change how you think. Not saying that you need to think like me, but just being more analytical and robust in your thinking as far as to, who do I follow? Like, look at a brother Polite, for example, because I know he watches me because now he wants to talk about quantitative easing. Take a step back and ask yourself, how does a man today, he's talking about health and wellness. He's an expert in health and wellness. He can talk to you about protein. Then he's an expert in religion. He's a historian. Then he's into real estate. Then he's doing cryptocurrency with crypto roots. And then now you go to this page, he's talking about stocks. And then he's a celebrity mentor. There's no way that one man can be an expert in all things like that. Because these are complex things. Like, understand, like, I'm still learning things about blockchain technology today. And I've been in the space, we're talking about, I've probably been in this space for like 8 years. I've been involved in cryptocurrency. And I'm learning about Taproot and Schnorr and programming on them. I'm learning new things today about something that I've been involved in for years. I learn about new wallets and, new apps and programming on the blockchain, and I learn about new cryptocurrencies almost like every day. There's something new to learn about. Like what just happened with Steeman and Justin's son. Yet this man is like every 3 months, he's an expert in something different. Every week. So when I make these videos, to get you so that you can start really being analytical, because a jack of all trades is a master of none. If I can make millions of dollars in real estate, why am I going to be over here now trying to do stocks? And then I'm going to be trying to do this and trying to do that. I'm going to focus on what I'm good at, what makes me money. Like, you don't see LeBron James trying to play football. He played football in high school, but now that he's a pro and makes millions of dollars, he plays basketball, right? Like, you do what you do. Like, when you see me here talking every day, what do you hear me talk about? I day trade stocks. I talk about investing in gold and silver, investing in cash flow real estate, right? And investing in crypto. That's it. I don't know anything about, I'm not a derivatives trader. I could not talk to you about how to trade derivatives. I know how to trade, but that's an aspect of trading, a segment of trading that I don't do, right? I'm not a bond trader, so I couldn't talk to you about trading bonds because I don't trade bonds, right? I trade futures. So if I came to you today and I was trying to sell you a course on bond trading, you would have to call me a fraud. When people ask me about options, I've tried options. Every now and then I'll play with some options to hedge a position, but I'm not an expert in options. I'm not a great options trader. That's not what I do. So I would be lying to you if I came here today and tried to sell you an options course. That would be a lie. When a guy asks me about Forex, I've traded Forex before, so I can come to you and say, go to babypips.com. Why? Because I've traded Forex before and I know good information. Like, I can speak to you about things that I've done. Brother Polite's he's not doing any of these things. He's selling you. Like the guy said, he's an opportunist. And that's why I created this channel, to get you guys to be able to think a little bit deeper before you go and listen to what a person has to say. I don't care what somebody does in their personal life. I don't care how good of a husband or wife you are, if you're gay or straight, you're black or white. I don't care about that. I care about if what you're telling me can make me money. And it's just not enough time to do all that stuff. It's just not. It's not realistic. It's not practical. It's not practical. You know, same thing with real estate. Like, are you a fix and flip? Are you a hard money lender? You know, like you can't do it all in real estate, right? You can't, unless you have a team. Now, if you have a team of people, of course you could. If you have a real estate office, then one person's handling the marketing, the other person's handling the acquisitions, the other one's handling the contractors. If you have a team, but if it's just you, there's no way that you're doing all of that. There's no way that you're investing in companies, keeping up with the news, being a father, being a husband, doing real estate, you know, debating the Hebrews, debating the Moors. There's no way. There's no way. And you can tell when he speaks that he speaks on like very surface level stuff. He doesn't really dive deep into the technology. He doesn't, like when he was at Crypto Roots, like what happened to the whole crypto stuff he was doing? You know, so that was my whole point of, you know, making this channel. As I said before, I knew that after my first month, I wasn't going to make a lot of money. And that's just the reality. So, but I feel good that I'm helping people. I feel good that I'm also getting better at my public speaking. That's another thing I wanted to work on. I wanted to get better at my public speaking. And I enjoy making these live streams. You know, I enjoy making, you know, videos and creating content. I enjoy this. I enjoy talking. I'm an introverted person anyway. I don't go out a lot and stuff like that, except for on the weekends. But most of the time I'm in my house. So I enjoy sitting here talking and getting better at my public speaking. And this forces me to stay on my game and research things and get better at my presentation. So I'm doing this for a bigger picture because I want to be like, I hope that one day I can be like a Richard Hart, or be like an Ivan on Tech, or be like an Andreas Antonopoulos, where I can have a show and have a platform and have 2,000-3,000 people want to hear what I have to say. So I'm investing in my future. So, you know, like I said before, and I appreciate you guys who are here with me from the beginning. You know, so that's my thing. And it may take me 2-3 years to get there. And I don't have a problem with doing that. I don't have a problem with working. But my main thing is, as long as I'm helping people keep money in their pocket, and I'm giving you information that you can go and verify yourself and figure out what works for you, like how I just helped the guy John, then I'm doing my job. And that's the most important thing, like that. And I don't even have a single Bitcoin, but I'm just saying I see why people like it now. It gives us hope. I am hoping Bitcoin continues to proliferate. The QE thing showed how little the Fed cares about the petrodollar. The old system is going to collapse and we need a replacement. 100%, Manic Tiger. And that's why, you know, I sit up here and I talk about Bitcoin, and I want to create a course, but then the other part of me doesn't want to create a course because I know it's going to attract a whole bunch of crazy people and all that kind of stuff. And it's just like, and I don't know if there's enough demand for it, but there's so much deeper that I can go. I really give you guys a lot of surface level stuff with Bitcoin, but there's just so much deeper you can go with not just Bitcoin, but just blockchain technology. You know, taking power from central entities where now the people can have power. You know, like even with these elections, like how do you know if these machines are actually tallying up the votes correctly? Imagine if you could put voting on a blockchain where you didn't have to guess who voted for who. You don't have to depend on some machine and some central party. Do you know that there are certain districts that count votes by hand? Imagine if you could put voting on a blockchain that was immutable, that you can go back and you can look on a ledger and you can see all of the votes. You don't need to see the persons who voted, right? There could be some type of address that makes you synonymous, but you can actually see all of the votes. So you don't have to depend on, you know, some hillbillies in the back somewhere messing up some of your votes. Right? That's the ability of a blockchain. Right? So, and having a distributed ledger that everyone could see. So there's no guessing. I don't have to trust you. I can verify. That type of stuff is going to be on the blockchain. That's the future. You don't have to worry about Bush stealing an election like he did years ago. So there's so many things. Derek Snurl, I'm not 100% sure about that because I wanted to say that as well. Derek Snurl, I hope I'm saying it right. Snurl. It's very, very key that you said that. Being an accredited investor to invest with Cardone Capital. I have to verify that, but I'm gonna take your word for it. I've spoken about that before. When you are an accredited investor, like for example, when people invest money with me, you have to be an accredited investor to invest in my fund. It's not that you know more than a person that's not accredited. What it is saying that you have enough assets that if you lost money, it wouldn't change your standard of living. And see, I think I might do a live stream about that tomorrow. I really like what you said, Derek Snur, right there about the accredited investor aspect, because I've spoken about this. If right now I go to my investors and I say, hey, man, we're down 50%, it's not going to change their standard of living. The people who Jay Morrison is getting money from, these are people who, like when you look, we all seen the racial wealth gap data. We can look at the demographic, like he's going on Vlad. He's going to the Breakfast Club. Those are not people that are financially astute. Those are not people that have a lot of wealth. Let's just be honest. And he's getting $500 investments here and $1,000 investments there. He's going after people. They don't have the capital to take those type of losses. Right? They just don't. Right? They don't have that kind of capital. So when you look at the difference, and this is not me caping for Cardone Capital, but the people, if they lose money with Cardone, they lose money. Oh well, they'll be fine. They'll live. Their lifestyle won't change. But the people with Jay Morrison, they can't afford to hear that they're not getting their money back for the year. So, that's the difference. And I think a lot of people miss that. Like, and just the whole way that he markets the stuff is just like, buying back the block and stopping gentrification. And he's only closed on like 2 deals or 3 deals, I think it is. Like, come on, you're not buying back no block, please. And it was so many different things he could have. And listen, I'm not even a real estate expert like that, but there were just so many better ways he could have allocated that, that capital. So many ways he could have leveraged that capital. There was so much he could have did with that capital, and it was really just to enrich himself. Let's just keep it real, man. It was for him to make money off of it, for him to live life and be rich in real life. And if that's how you got to make money, then I guess I'll never be rich in real life like Jay Morrison. Like I guess I'll never be rich in real life because I can't make money. I could never make money like that. I could never make money off of selling people dreams. I just couldn't. I'd rather just be broke and I'll do my little. Well, I'm not broke, but I'm saying like I would rather just be where I'm at than make money that way. I'm not making money like that. I'm not making money off of selling, going into the hood and selling poor black people courses or selling them, that they're going to get rich with the Tulsa real estate fund and everything's going to change. I can't live like that. I couldn't. But with that being said, guys, we're coming up on 2 hours, so I'm going to cut the stream here. We'll be live streaming tomorrow. May do a Jay Morrison video. Not sure. Thank you guys to everyone who's donated. I appreciate it. It helps the content, helps me create more content. Please like this video, share this video, subscribe, hit the notification bell, join my mailing list. Let me post my Instagram again because someone told me that my Instagram wasn't coming up. So I'll do that again. And I'll see you guys tomorrow. Give me 1 second. Let's post this Instagram. I'm going to have to go back to my videos. No wonder my subscribers weren't going up. Wow. That sucks. Copy. Paste. And again, I'll see you guys tomorrow. Have a great night. And thanks to everyone who supported the content tonight.